Today we're seeing stocks gapping up higher, but look at the close on the S&P 500, closing near the lower end of the range. Yesterday after the bell, we saw Microsoft rocketing to the moon after earnings. We saw Meta rocketing to the moon after earnings. And then today after the bell, we have Amazon and Apple, Airbnb, and Reddit. And after the bell, Amazon having a negative reaction to earnings. We come over and look at Apple. I don't think their earnings have been released just yet. So now our attentions are going to turn over to tomorrow. Tomorrow is going to be all about the non-farm employment change. And on two different times this week, we've already had employment data not come out so great. On Wednesday, we had the ADP non-farm employment change come out with a report of 62,000 jobs versus a forecast of 114. Previously 147. Then this morning at 8:30 a.m., we look at the weekly unemployment claims rose to 241,000 with a forecast of 224, previously 223. So tomorrow, are we going to see a big miss out here? And if the market does miss the number being 138,000 jobs, is that going to be a buying opportunity for the market? You might say, Mike, jobs miss. Why would the market go up? Will we see that the market then starts pricing in that the Fed is likely to go ahead and start cutting rates? We look at the fear and greed index. We are finally back over into neutral territory. And at one point today, we're almost at 50. However, we're still able to close at 47. Then we come over and look at how the indices fared across the board. The Dow was up 83 points. The NASDAQ was up 264 points. The S&P 500 up 35 points, with the Russell 2000 being up 1.21. We look at advancing issues versus declining. We had 53.9% of issues advancing on the day. Then when we come over and look at the sectors across the board, technology by far outpacing everything else. And with Microsoft and Meta, that's really no surprise. Healthcare was a big laggard out there, down 2.41%. And then speaking of jobs, as we were talking about jobs, Estee Lauder lays off 2,600 workers out of its 7,000 target as sales start to drop. Then we come over and look at what McDonald's had to say since McDonald's had earnings out yesterday. McDonald's sees lower foot traffic as revenue misses Wall Street expectations. Then we come over and look at how McDonald's performed today. McDonald's was down 1.88%. And I think traders need to pay very close attention to what UBS is saying. Sell rallies in stocks as trade shock sets in, says UBS. And keep in mind, we still have all the problems out there with tariffs. The tariff situation has not been resolved yet. We can see JP Morgan also saying tariffs to have the greatest negative impact on US economy of all Trump's actions. So again, until we get this resolved, until the tariffs are resolved, this is going to be a problem. Yes, we're having a decent rally on the way up because when we come over and we look at the SPY, for instance, notice we've had a pretty good move up off the low. If we measure from the low in the beginning of April to the high of today, we rallied up 17.71%. Even if we look at the most recent, the straight leg move up we've had, we've rallied 10% without any sort of correction whatsoever. So tomorrow with the NFP data coming out, are we about to see the market going lower? You can see right here today, the jobless claims rise to the highest levels not seen since October. And they say this is not from the tariff war. And keep in mind, right now, we still have not felt all the effects of the tariffs at this moment. So when we start looking at some of these indices, is this nothing more than a bear market rally? We can see that on the SPY, we still have a price projection up here at about 574.58. However, today we were able to go ahead and take out some of our targets. Now, as we come over and start looking at the 4-hour chart real quick, we see the MACD indicator still crossed to the upside, still trending up, but you can see the angle in which the MACD indicator is going up is starting to weaken. That is a sign the momentum is starting to wane off here just a bit. Then you couple that with the fact that that gap that we left behind from today and the other two large gaping gaps behind us really lends to the opportunity for a pullback in this market. Then as we come over and start looking at the volume profile, you can see that right there starting to close. We've seen the S&P starting to roll over, and look what we had right up here. High, lower high, here's a low. Now we're starting to make a lower low. Now, the profile shape today was a D as in dog, which normally signifies that on the following day, we're likely going to get a breakout or breakdown from this pattern. Now, one thing we do want to be mindful of is in the fact of a D-shaped profile, quite often the first way we break ends up being nothing more than a trap. So do we maybe flush down tomorrow on the NFP news, maybe fill in the gap, and then we ultimately rally up? Or do we rally up initially off the move, then the market starts to come unglued and we start to pull back? Because as we come back over on the daily chart real quick and we look at the EMAs, notice the blue line is the 50-period simple moving average. We still have the 200-period moving average up above us. So Are we going to come right up in this zone and then simply reject right back down? Now, I want to make you guys aware of two amazing offers out there. My Fun and Futures, 50% off any plan for new users, and Take Profit Trader, 30% off all evaluation accounts and no activation fee. If you want to take advantage of these offers, use the links in the description box down below. As we come over and start looking at the futures markets today, we were able to take out one of the key levels, the untested point of control, 56.74. We still did not take out the ABC pattern completion up here at 57.24. So I won't be the slightest bit surprised if we do start to have some type of correction on the way back down to work off some of this upward momentum. And at some point, that gap from last week is likely going to come back and be filled. As we come over and look at the 30-minute chart with the volume profiles, we can see that D is in dog shape profile, very well defined. We see last night, we initially had a move up in Asia, and then just basically a big chop fest all day long. Now, as I'm looking at this, I want you guys to pay attention. We did not hit the P point out here today. So tonight at 6 p.m. when the futures markets reopen up, wherever the new P point is going to be the target I want to focus on for tonight. We also have an untested point of control down here at 55.34.5. So as long as we are below value area low, I want to turn my attention to some lower targets. Also, let's not forget, yesterday we had an untested value area high, which came in at about 55.80.00. Now, the rule behind that is whenever we close outside of value, highly probable the next 1 to 2 days, we come back and we retest that area. Today, we didn't make it. Will Friday be the day? Will it be the NFP data that comes out that flushes the market down towards this area? Now, if we can start getting back above value area low, which really comes in about 56.36, then the next target is going to be 56.46.5, which is the point of control, and then value area high at about 56.63. Then as we come over, look at the volatility index, the VIX was down 8 cents on this session, but we can see a late day rally did take place in the VIX as the market started to sell off just a bit. So a lot of traders, I think, were anticipating that the Amazon and Apple news and the Apple earnings were going to go ahead and push the markets up exactly like we saw yesterday with Meta and Microsoft. And so far, that has not been the case. As we look at the dollar index today, dollar index on the move up higher. And with the dollar index moving up higher, what do you think gold futures did? Gold futures on the way lower. And let's not take our eyes off the prize. We had the gap fill right over here in the gold futures, which comes in at a price point of 31.77.5. Now, as we come over and start looking at the Qs real quick, notice we're right here between the 200 period moving average and the 50 period moving average. So if the market's going to reverse, this would be a logical location. You can see that large gaping gap left behind from today, but I do got to warn you on the daily chart, the MACD indicator at this moment still looks extremely strong. Now that narrative does start to change on the 4-hour chart. Yes, the lines are still crossed, but if you look at the angle right here, as opposed to over here, you can see it's starting to round off here just a bit. That could be the early warning signs that we're getting ready to pull back and at minimum fill the gap left behind from today. On the 30-minute chart, we can see here's a high. We have a lower high set in place, and then we have a low and a lower low form that D-shaped profile. So if we do start seeing price stay below value area low tomorrow, I want to look and turn my attentions down here for that gap to be filled. Also, draw your attention down here to the MACD indicator. The lines are just about to cross, and we're going to see, do we go ahead and work our way down on the MACD indicator and price follows suit, coming all the way down, filling the gap. Coming over and looking at the futures markets real quick. On the 4-hour chart, the NASDAQ was able to not only take out the untested point of control at 20,080, but this other A to B equals C to D pattern, which went like this. The A to B leg, the B to C leg was a corrective leg, and the price completion was right up here. That target was hit today. That price completion was 20,054.76. Now, there is a larger ABC pattern from right over here at the low. You pull up here, you pull down, and that price completion is all the way up here about 20,372. Now, we have had quite the move on the way back up, so a pullback does make a lot of sense at this moment. However, it does not have to happen tomorrow, but I do think tomorrow could be a very good catalyst for it. Coming over and looking at the 30-minute chart with the daily profiles, we can see that very well-defined D as in dog shape profile, and we are closing below value area low, which comes in at 19,919.5. If we can get back above that area, highly probable we retest the point of control, which comes in at 19,968, and then value area high at 20,025.5. Now, note, similar to what we talked about yesterday, anytime we close outside of value, it's highly probable the next 1 to 2 days we come back and test that level. So tomorrow or tonight, do we simply run up to here and then we ultimately come down testing yesterday's value area high? Or do we simply just flush all the way down to value area high and then maybe flip back up? Keep in mind, today we did not test the P point. So wherever the new P point is tonight at 6 p.m. is going to be a target for me, not only during Asia, but also during the New York session if that level has not been hit just yet. We also have an untested point of control down here at about 19,417. So if we can start flushing below value area high from yesterday, then I want to turn my attentions down towards this area. And like I've been saying throughout this video, tomorrow we have the catalyst that could produce a very negative day in this market. However, we don't want to be one-track minded. Let's trade what we see, not what we think. Now, before you buy your next prop firm challenge, you want to be well aware of these things when comparing different prop firms and different account sizes. Make sure to watch this video right here.